Hi, this is Devin Haub with Remax. Thanks for watching this. I'm going to compare my condo that I bought 2 years ago versus the S&P 500. I'm not an exact mathematician here, so hopefully my calculations all are correct, but I think in general it's pretty easy to see which one was the clear winner. And let's just dive in. I purchased this condo unit in September 2017 for $157,000. I could not get the seller to pay my own closing costs, so I had to pay for that, and that was $3,900 out of pocket. The down payment was $39,250, which is 25% of $157,000. Since then, I have found a lender that will actually let you buy 10 rental properties. They'll give you 10 of these mortgages, 15% down, no mortgage insurance, and a way better interest rate than what I got on this. And like a 0.5% better, improves cash flow, improves ROI. Anyway, so this was old news here, but my total cash in was $43,150, and the mortgage is $654. That includes principal, interest, and property tax, but there is no mortgage insurance because the HOA already provides the insurance for the walls out. And so you take the roof off, flip it upside down, everything that falls out is not insured, but the building itself and the cabinets and everything else are. So you don't need insurance on most condos. The HOA is $114. It saves you insurance, it pays your water, sewer, garbage, and internet is provided. I rent it out for $1,000 a month. Rents are now $1,050, but I haven't changed my rent yet. The cash flow is $232 a month. And I just apply that cash flow to the mortgage because it'll shave off roughly 12 years. So I'll pay this thing off in 18 total years, and I'll save $36,800 along the way. So $230 a month isn't, going to change my life, but it does significantly change those mortgage terms. The ROI analysis. So today it's appraised at 185. Recent sales, people are asking 190, 195 right now, but we'll just use 185. We'll put in some conservative selling fees of 6%, which my clients will get a lot better rate than that. And my current loan balance of 107,200. I'm not going to the cash flow that is positive. I've been applying to the mortgage, so I'm just going to put those numbers. It's reflected in that mortgage balance. So the initial cash invested was $43,000. The net profit in 2 years after you take price and subtract out everything is $23,550. That's what I'd walk away today with if I sold. So I put in $43,000. It grew to a total of $66,700, and that math is 185 minus this minus the loan amount, and it includes my initial cash investment. So initial cash investment plus this, so the money has grown to $66,700. There's the $23,550 that I netted. That's net profit from September 15 to November now. That is a 22% annualized return, total return of 54%. Now the stock market, if I had put $43,000 in the stock market September of 2017, let it ride till now, it would have grown to $53,605 versus it has grown over here to $66,000. So my condo won on how much it has grown. The annualized return is 10.9. This is a website calculator taking into account each year's appreciation in the stock market, and put out 10.9. I kind of questioned that, so I checked over here on another website, a different way of looking at it, because I do know that you can reinvest your dividends, and so this calculator really clarified that they were accounting for if you had reinvested dividends, and so still the annualized return is 10.9 like the other one said. So I'm pretty sure that's an accurate evaluation, and here's kind of what the stock market has done, but I bought the condo about right here. So had I put the money in right here, it would have saw a little bit of growth, then a decline, and then some growth. But these declines are bigger than they look, because even though it only fell roughly 6%, if you had $1,000 and it fell 6%, well, let's use different numbers that are easier. $1,000 and it fell 10%, now your 1,000 is 900. But the market goes back up 10%. But you only got 10% on 900, so you're going to be 990. You're $10 short. So it does take a little bit more than what it had fell in order to get back what you had. if that makes any sense. So my condo, it did do better. It's a 22% annual return versus 10.9 according to these calculators online. I don't know how they figure those, but what I do know is dollar for dollar, I got 66, almost 67,000 net profit out of the condo versus, according to this, my chunk of change would have grew to 53,000 had I just let it sit. So the condo was the winner. Now, if you like the video, I please hope that you like it. Comment, let me know that you watched it, especially let me know you watched it to the end. That's always exciting. And here's a big cliffhanger. My first house, I ran the numbers, and my very first house, I experienced a 1,700% return over 4 years, and that's insane. And $2,800 grew to 50,000 in 4 years. So I'm going to show you how your personal home can really kill it if and tax-free too. That's tax-free money on my personal home. And so I've really been feeling like millennials, my generation, it's tough to build wealth, and pretty much everything requires dual incomes, and then there's still lots of month-to-month living, paycheck-to-paycheck living. And so I feel really strongly that if people would kind of give up the 1950s American dream of home is going to be my home for 50 years, but if you could bounce around home to home for live there 2 years so you can get away with capital, you don't have capital gains when you sell. It's a really awesome way to build wealth. Then go dump it in the stocks and let it ride, do whatever everybody does that way. But I'm going to challenge it, and I'm sure there's very smart people that are very good in the stock market that could paint a different picture, make stocks look better. And I don't really care to argue that necessarily, but real estate is just very predictable. It's understandable. I own it. Even if the market goes down, I don't really care because there's positive cash flow. I could always lower the rent if I had to, but I'm going to make a video about that. I'm pretty sure rents don't really fall in recessions very much, if at all. And so you just rent it till it comes back, and they're paying your mortgage off, and eventually you get these things paid off. You just have cash flow. Who cares what the market's doing? You have cash flow. And so anyway, I'm going to talk more about that. And if you guys are interested in my opinions, you like these videos, please like on Facebook, Instagram, YouTube, whatever. Please like wherever you're watching this, comment, and let's learn together. Thanks for watching.